to get in. They can live, work, or worship, but generally across the board, across the spectrum, if you look at the bell curve, credit unions have better credit. Credit union members have better credit. So it is actually absolutely fascinating. By the time I'm done talking today, okay, there will be another competitor that enters the space. And if we look at places like Lending Club, have you guys ever heard of Lending Club? Yeah, this should frighten you. And I'm going to show you some numbers here of what Lending Club has been able to accomplish. That's called fintech. Have you heard that word before? Fintech. They are a peer-to-peer lender. Have you heard of Sophie? Have you heard of Prosper? Heard of Prosper, right. So we've heard of some of these startup financial companies that are disrupting our market, right? So we were talking earlier a little bit about the advancements in high-speed internet. Listen, high-speed internet changed the world, right? If we want to look at where lending is going and actually where it is, all we have to do is look at things like Amazon Prime, right? How many of you use Amazon Prime? Yeah. Right. And what is your expectation when you use a service like Amazon Prime? It's quick. It gives you unlimited options, right? I mean, if you want to buy anything, if I buy anything today, I go to Amazon Prime first. I live in the Denver metro area. I ordered a mouse for my computer. A mouse, a plug-in mouse, a $7 mouse for my computer. I ordered it on a Friday. I had it delivered on a Sunday by the U.S. Post Office.
By drone?
Not by drone, there. But I had it delivered to my house. If we have to look at where consumers' expectations are, we have to look no further than something like Amazon Prime.
Well, they're putting all the big box stores out of business. I mean, look at Macy's and Penny. I mean,
J.C. Penney's.
Yeah.
They put all the bookstores out of business.
Yeah.
What's going to happen when Amazon gets into the finance world?
No.
What's going to happen with that ecosystem, right? What's going to happen if Apple, which they already are, right, in finance, are already with Apple Pay. We have to understand that what we have to offer isn't special. But don't worry, there's some hope at the end of this. We're going to talk about what we offer that is special. And if we look, the world has changed dramatically since 2008. Since 2009. And in order for us to remain relevant, we have to understand who our competitors are and how we're going to win. How are we going to win at your asset size? You know, what is our competitive advantage? And we're going to discuss a lot of that today in the talk. You have to be able to understand where your losses are, right? And in what are contributing to your losses in order to identify them. Because, I mean, do you think 17.5% is a high interest rate? I'm just curious. Do you think that it is a high interest rate for a signature loan?
It depends on the paper.
Yeah.
And some of our members are happy with that.
No, they're absolutely. I mean, obviously, a lot of people aren't concerned about rate, right? And your borrowers, you guys are small credit unions, so your borrowers understand more so than at other places, and you're not competing for this A-paper business as much. And we'll talk about what those reasons are. You're not getting it. I'll tell you why you're not getting that A-paper business. Anyways, it's interesting to look at, right? $20 billion in loans.